Oh, well, Arvind Sanger is now joining us, managing partner at Geosphere Capital Management. Arvind, good to have you with us here. Thank you very much. The market here did come up very nicely over the last 1 month or so to very close to the previous highs. So the question is there enough in the tank to take the market meaningfully higher from here? Or you think, we kind of turned down from here a little bit, given what's going on? What's your sense?
Well, I think the global headwinds are going to be an issue for all markets. I think India is obviously in a much better situation in terms of macro risks. I know you were talking just about the Karnataka election, but I don't think that's a big deal. China has serious problems. We've been disappointed, and I think investors have been disappointed by how poor that rebound from COVID has been. U.S. has several headwinds. Inflation has still not come down. Fed is still not, talking about pausing in a meaningful way, although they may pause for a month. And you have this debt ceiling. I was just looking at credit default swaps, which is the insurance against default. And U.S., it's more expensive to buy insurance against U.S. defaulting on debt than it is to buy on default swaps from Mexico or Greece, which is a sick man of EU. So the fact that the U.S. is flirting with that. So my long-winded answer to your question is, I think the global headwinds create risks for global markets, for risk off. But within that framework, India is probably one of the better places to be. But I don't think that one should assume that any markets will be sanguinely moving up if U.S. is going through the kind of dislocations that is seen right now. So I would say that discretion is a better part of valor right now. I'd be a little light in terms of risk in the current environment.
Arvind, hi. Good morning, or rather good evening to you. On this U.S. debt ceiling, I mean, I take your point, and that's a pretty interesting piece of data on the CDS, Mexico being cheaper than even the U.S. But surely this is not even a base case, or is it even within the realm of cues that we're tracking? We were just talking about this a while back. It's almost a yearly phenomenon. It plays itself out, a perfect script. Is it anything more than that? Should we be paying attention to what's happening when it comes to U.S. politics?
Well, I would say that, if you ask me today, I think there's a 90% probability that nothing will come off this. But the fact that we are talking about even a 10% probability of something like this happening is what is concerning, right? Because, you had President or former President Trump talk at a town hall meeting about the fact that if the Democrats don't agree to deficit reduction, then they should go ahead and, let the U.S. default. You have, enough people who are at the fringes in the Republican Party talking about that seriously, and the two sides are so far apart. And, the X date, as they call it, is sometime, I don't think it's 1st June, although that's what Janet Yellen has told, but it could be sometime in mid-June. So I think we're kind of bumping against time. My expectation is still 9 out of 10 that we will, at worst, extend the ceiling for a while negotiations continue. But I think right now the mood in Washington and the craziness amongst the politicians and the big spread between the two parties is so large that I wouldn't, say it's a zero probability, and that's what's concerning.
All right, Arvind, before we let you go, what would you look to buy in India? I recall when you visited our studio, you were telling us that the power sector is looking up. I'll tell you what, Arvind, it's really hot here in Mumbai. Every morning, it's a bit of a task to get to work as well. With that aside, you were telling us that sector is looking up. I think Coal India was another stock that you all owned. Tech was something that you were staying away from. How have things changed? What are you bullish on now?
Well, I think that, in terms of Indian domestic capex, we like some of the private sector companies that benefit from growing, demand for grid build out, for electrification, for industrial capex. We like that sector. That's a sector that is of, quite significant interest to us. And then we like, some of the special situation companies across a variety of sectors. I think the financial sector, we still find opportunity in some NBFCs and banks which have not moved as much. And we like, some other consumer-facing sectors and real estate, which is, I think hard assets should do well in an environment where, people are looking for safety. I think gold, which I don't have exposure to in India right now, but I am interested in, is something that I think has structural legs to it. And I think the gold side of the story is hugely underappreciated, in my opinion, by investors. Central bankers in the last 3 quarters have increased their buying of gold by 500% over prior periods. And that's because of the U.S. seizing Russian foreign currency reserves. So central banks around the world, led by China, are diversifying away from U.S. Treasuries. So I think that's an area to keep in mind in India too.
Okay, interesting themes and thoughts there. Arvind, before we let you go, we discussed the politics of it. We're also coming off the earnings season. I think in India, at least at an index level, no one's any wiser about which way the market wants to head. So let me ask you about the mothership, the U.S. market. Politics aside, what sense do you have? Will the market have a clear directional move? What are earnings saying? Yes, big tech has been good. But any sense of, in which direction the mothership could head in the near future?
Well, in addition to the political risks, I think the economic clouds are still around. And I think the possibility of a recession because of tightening credit conditions, because of the banking sector crisis with the regional banks and other factors cause us to be very cautious about the earnings outlook, certainly for the second half and maybe even for the second quarter. And therefore, I do not see the U.S. market being anything but range bound. And right now, at the high end of its trading range, and probably 3,800 S&P is kind of where we would look to get maybe more interest in the market. All right.
Thanks very much, Arvind, for joining us. It's great speaking with you. On the debt ceiling, right? There's an old saying that Americans eventually do the right thing after they've exhausted all the other possibilities, right? So, and we'll see if that is true this time around as well. It is every year. I hope they don't go too far. Yeah, I hope they don't go too far in exploring the wrong options. Arvind, I read somewhere, and I think it's true, that they actually were considering a provision to mint a coin, a $1 trillion coin, which would solve all problems. So this is make-believe world. But of course, lots of debate around that, but we'll do that another time. Thank you very much once again. Appreciate it very much here on the program.